Hey everyone, let's do today's review. Yesterday we got a rejection, got an engulfing on Q, engulfing on SPX, and a couple of things happened on the economic side. One was there was a 10-year auction. Let's see, 10-year auction, and apparently there was little demand for it because yields are too low for people to be interested in buying, and that's why we kind of got this surge yesterday and got up the way to 436. Sorry, not it was 4. Um, Basically, yields here are too high up to 1 year, and people are not interested in buying bonds. These are anything below 2 years considered to be a bill. Bonds are 10-year plus, I think, or 20-year plus. I think 10-year plus, and coupons are in between. So nobody wants to buy this because yields for these are too high. And this means yields have to go up for the longer end, or yields have to go down for this one for the comparison to be smaller. And the other interesting thing that we got was used car prices. We had a year-over-year increase, sorry, month-over-month increase, and the year-over-year got significantly higher relative to last month's. This is the Manheim used vehicle index. And interesting to add, US inflation rate NOM. You can see that they're pretty correlated. We get a spike in one, the other follows along relatively quickly. What happened now? We just had another spike here on the month over month, and we're waiting for the next week's CPI print. I posted it, still have it drawn like this, in that if there's something that can get us like a 20% correction, is a CPI print that is uh, negative, or a hot CPI print, not negative CPI print. So we also have that proper correlation. See, which this part of the rally hasn't happened. This inflation rate. We haven't seen this part, and this is all lagged. Basically, I would have to move this back a couple of months. This is a monthly chart for US CPI, and if I just move this one back like 2 months, and I can do that, have to add the indicator that can do time offset. Inflation rate, offset -2. About at the point where we should at least see that spike that correlates with maybe -3, seeing the lows. So we should we should be seeing a tick up in inflation, and that's basically the worst case scenario for all asset classes and everything in between, because it means the Fed cannot cut. Uh, we got a bounce or a stop in the pullback because people panicked, and when people panic, they have expectations of what's going to happen next. The expectation currently is that we get a billion cuts by end of the year, like 0.5 cuts for at least the next 3 meetings. And if that is contradicted by an increase in the CPI, all hell will break loose, and I think there's a chance we get that 20% correction actually, not just a low retest. A low retest is almost a given regardless of what happens by CPI. Like we could get the low retest before that. CPI is on Wednesday, so we can go the low retest by then. There's like 4 days left in which we can get the low retest, and likely we'll get the low retest in that time. But if we are at that low and then the hot CPI print comes, then we're kind of fucked. We go much lower than this, and people will get panicked a lot because it means the Fed cannot cut. A hot CPI print, it means the market is wrong. We have to reprice yields. This 10-year has to go like to 4.5 again, something like this. TLT will dump, and so on and so on and so on. The good news is that JPI will dump as well. So all this move will get reversed. But in spite of this move getting reversed, it still will mean that the market dumps because the Fed cannot cut. Yeah, now let's look at what happened yesterday. The call about going to 435 was the engulfing candle prediction. Let's delete this because it's not relevant anymore. This is okay. So basically engulfing candle. We have this candle. We zoom in. And it starts here and goes all the way here. We were at 50%, like 440, 62 or 82, whatever the value is. Basically, if this doesn't hold here, we go for the full engulfing, meaning uh, we target going below this 43456, and that's kind of what happened. Now we have a bit of a bounce in pre-market, but nothing serious. We're kind of around here because in post market we went below, and US 100 is relative to the level we closed at post market, and it appears to be green like 4.6 438 up, but that's actually putting it around here. And we can take a look. Where are we relative to this candle that is visible on QQQ as well? So we are just about that above. We go back here. So we are right around here. So not that high, 443-ish, something like that. And probably still red on the Qs relative to yesterday. Okay, this being said, it's a double rejection. Got rejected once, got rejected twice. Second rejection pushed us lower. Um, it's extremely difficult to call things in these scenarios because we can chop, we can do fake out moves either direction. I thought there was a chance we would break out here and go to 465. When we didn't, we dropped quite a bit. Now there's a chance we can retest the low, and again we can get faked out. Maybe yesterday's low holds. Like I said, we are about here. We could do something like this, or we could do a fake out. It tries to go lower, but doesn't go that much lower, just shy of 430, like this. This was 440, so it went below 440. So let's put this level here as a benchmark, in which it's yesterday's low, even if it's post market, and it could do something like this, and now go back up here. Lots of possibilities in the way it can play out. The point I was trying to make with the discussion about CPI is that I don't think this will have a real move until we see the CPI print. Like we can chop, we can do broadening formation. And now that we have a bit of a build up here, we can see this, or we can see this broadening here on the other side. Something like this. This one goes away, we don't care. I could even do it like this. Probably better like this. And now we have our broadened information range, which is broadened information is our price discovery patterns in which the market doesn't know what to do. But when we get out of it, it will go out of it big, like equivalent to the size of this. So if we were to go below and make the low retest, target would be like 415-ish, something like this, based on this broadened information. Marginal new lows, that's it. Now, let's draw. The idea is that we can do basically everything in this range, and it's unknowable what will happen. We have plenty of time until CPI, which will be here. Oops, didn't click on it. Here. And PPI, it's possible we get an early reaction because of PPI, and then just continuation on CPI 1 day before. So we kind of have all this time here to basically do whatever. Uh, that's why it's hard to trade in this setup. What you can do is just respect the levels from the horizontal side if you want to trade it. If you don't want to trade it, just wait it out. Nothing will happen if you don't trade this. Um, yeah, I wish I could be more helpful in this scenario, but it's just chop near the lows, and if we don't break down, that we won't have any big moves. We only have big moves at the edges, or if we have a breakout. Like at any point, if we have a breakout, if this would have broken out here, it would have surged a similar move to this, but in the other direction. Yeah, is it the same type of move? Almost exactly to the tick. Like it would have been 7% up. But we didn't get it towards the upside, we got it towards the downside. Now we are in the other scenario. If we get it to the downside, it will be like 415. And this is a buyable dip regardless of what happens for CPI. So even if we get this type of move here and we make uh, the low that we've been looking for, it doesn't save us from what happens on CPI. That's still a risk, but regardless of that risk, we could get a huge move up very quickly. Like if this dip buy will be like this, it's on a bullish divergence most likely. Sorry, come on, I'm not clicking stuff correctly. So this will be a bullish divergence most likely, and we can go up, and I think we can get a huge bounce from here, maybe like 457, 460. That's 10% up, and there is still time to get this type of move. Imagine we can drop today, and then we still have 3 full days almost of a potential bounce here, and the dip buying need will be huge. Something like this. This is 10%. It's a lot. So don't wait for CPI if the opportunity comes to for us to get a low like this, a lower low on a divergence, and VIX lower high because VIX started going up again. And now that we have a bit of a, we have some levels, probably like 33, 35 will be the lower high. Maybe this 37-ish. This seems too high. I don't think we can get to 42 without another blow up or something. This seems reasonable. Like either any of these levels can be our lower high on VIX, and something like this. But the real test will be on CPI because more than one thing is starting to point towards us getting a hot CPI print, and the market will go crazy if that happens. So target for the lower low Of course, it can be here as well. Anything below 420, I think, is good enough. If it happens intraday, not outside hours. So if we get this, we should be going up a lot. We have a potential for 10% bounce in QQQ before the CPI and PPI prints. So don't miss this opportunity. Okay, that's it for today. Have a good one. Bye bye.